Hey there, Matthew Chang here. Wanted to check in and talk with you a little bit about a popular subject right now, which is deficits. They're dominating the news. What are they, and what's going on with them? So there's two type of deficits right now. The first deficit that we'll focus on is the federal spending deficit. In other words, spending more than we take in revenues at the federal government level. The second type is trade deficits. So that is where we have an imbalance in trade and another country sells us more goods and services than we sell to them, being trade deficit. So let's first off start thinking about deficits. Are they bad? Well, a deficit to me is a lot like a credit card debt in your personal household. It means that for the month you overspent your income and you end up with some short-term debt. So that of course is a bad thing if it accrues and turns into a lot of debt over time. Deficits can also be really positive. In times of war, historically, the US government has ran deficits because we have to borrow money, we spend more than we take in to finance the cost of war. Winning 2 world wars and a Cold War against communism, lifting tens of millions or hundreds of millions of people out of poverty, I would say is a good thing. Poverty and oppression. When we think about going forward, debt versus deficit, a lot of people get debt confused with deficits. So debt is what the country owes in total, and it's the cumulative effect of all the deficits plus the interest rate, the cost of borrowing on top of that cumulative deficit. That's the debt. I want to reference an article that I picked up in Zero Hedge recently. It was kind of eye-opening to me of, do deficits matter? Does debt matter? Right now, the federal government is on track to run a deficit in 2018 of $600 billion or more dollars. 600 billion is kind of the floor, and it could be more. Of the 600 billion, 300 billion of that borrowed money in the deficit is going to go to pay the interest rate on the debt. And this is kind of the tricky situation. If you're borrowing money to pay the interest rate on the debt, is that really good use of a deficit? And I would challenge that at some point it's not sustainable and probably not. Interest rates are going up, which means the interest rate and the debt service is going up. So we probably want to get control of that. Moving on to trade deficits. The big one in the news is the trade deficit with the US and China. When we think about the trade deficit with China, President Trump has been very vocal on that. And I was having trouble getting my head around it. It's $375+ billion trade deficit with China. We know China is a manufacturing-based economy. The US is now largely viewed as a services-based economy. There should be a lot that we can offer each other. And I wanted to look at it not from the libertarian view or the economist point of view, which would say that let the goods be produced the cheapest place they can be and sold back to the United States. But I want to say, what does the investor think? And in that case, we look at the Shanghai stock market. The Shanghai stock market has crashed 20% over the past 12 months. And a lot of this is on trade war fears with the US, where the US is implementing tariffs and those sort of things to prevent the low tax or no tax flow of goods into the United States. This Shanghai stock market has crashed 20%. The investors don't like the thought that Chinese goods cost more for the US. On the flip side, the US stock market, measured in the S&P 500 or the Dow Jones Industrial Average, is up more than 20% in the same 12-month range. And I don't think it's fair to say the US stock market valuation is based totally on our trade relationship with China. But I would say, generally speaking, the stock market in the United States really doesn't care if we're in a trade situation with China. So in this case, I think it would be best to say that a more balanced trade relationship between the two countries is best. And I don't necessarily have an opinion on the cost of goods coming from one country or another being better or worse, other than to say that the two countries both are economic powerhouses, have a lot to offer, and the relationship should be balanced. And then probably the craziest example in front of us right now is the crash of the Turkish lira, the Turkey currency. The U.S. has implemented trade barriers against Turkey in retaliation for some political concerns, and their currency has devalued by a factor of 2. So it's been cut in half over a 12-month period. So is that good for Turkey? Probably not. And I think that it shows that small changes or perceived changes in trade can have really large impacts in confidence issues like investing and currency valuation. So I wanted to touch on those things. Hopefully those little facts put the context together for what deficits mean in today's context, and look forward to seeing you again soon. Thanks.